Alright, what's going on, guys? Welcome to another episode of Sensible Investing, the deepest stock market research channel on YouTube. My name is Jesse, and today what I wanted to do is to bring you guys a quick little update in terms of the most recent Canada Goose fiscal quarter 3 earnings call, and then a little bit of an update on the whole coronavirus situation and how that's affecting their whole business model. Now, we've got another stock that you guys are watching, queued in, which is coming up. I think they're reporting their earnings in about a week and a half to 2 weeks, so no doubt I'll be covering that. But today, I just want to take you through some of the key takeaways that I found from the earnings call, and then what I plan to do with Canada Goose, because as you guys know, I'm already out of the stock, and I really want to buy back in. And if you guys are looking at this thing thinking, is that a Canada Goose? That's not a Canada Goose. That's a black swan. And the reason why I put that in here is because, you know, this whole coronavirus thing is a bit of a black swan event, and that's why I don't think the market has yet fully priced in what that may do to the business. Okay, guys? So let's just quickly get into some of my key takeaways from the earnings call. So as you guys may recall from the video that I made last week, I said here were my expectations for the Canada Goose fiscal quarter 3 earnings call. It'll be an easy beat in terms of their most recent quarter. They will downgrade fiscal quarter 4 and the full year, and I was expecting that they would also lower guidance for next year, which would then have a subsequent effect of about 25 to 30% on the share price. Now, what happened was they did indeed beat, and they very comfortably beat the estimates, which was great. They beat the revenue, so everything was good, right? However, as also predicted, they then guided some significant impact due to the coronavirus, especially how it was affecting not just China, but its Chinese shoppers, right? So this is very important, guys, these two things, okay? We're not just talking about China being affected by the coronavirus, but we're also talking about people who live overseas, that love Canada Goose, that buy a Canada Goose a lot, who have the money to buy Canada Goose. They've also been affected, and I'll explain why as we go through the rest of this video. All right, guys, so first of all, I just wanted to take you through a key point that I found, and I think that this is very important, okay? So revenue is now at negligible levels across the entire store network in Greater China, okay, guys? And keep in mind that this sort of quarantine crackdown, and just remember, only Wuhan is under quarantine, okay, guys? Think about that. Wuhan's under quarantine, but Canada Goose has about 3 or 4 flagship stores in China and a lot of partner stores, okay, that sell their product. So the entire store network is almost at a standstill, okay? China, Hong Kong, Shanghai, wherever, okay, guys? So I think that this is very important, and this really gives us an insight into the fact that really nobody's leaving their houses, whether people are under quarantine or not, and it really just shows the distrust for the Communist Party that the people have in terms of, you know, all this news censoring and whatnot. So everybody's now starting to overreact greatly, whether rightly or wrongly, but what we can tell is nobody's leaving their houses, okay? Now, China is important, guys. Don't get me wrong, okay? So for their most recent quarter, China contributed almost 21% of the overall revenue, okay? And imagine that being at an absolute standstill. Now, Canada Goose was projected to be about $1 billion company by this time, sort of the end of next quarter, okay? So that is quite a large hit to their business. So like I said, right, 20%, that's not a small number. Furthermore, you know, they've downgraded their guidance in terms of revenue growth by only sort of 5 to 7%. And I think the reason why they've done this is because they have, I guess, maybe they're trying to ease the market in and not sort of go crazy, because, you know, maybe if they downgraded it to, say, 10% or flat, then the stock would have got sold off 30 or 40%. And I don't think the market's fully actually pricing in the gravity of the situation, whether it be fair or whether it be a reality. But what we can say is that nobody wants to leave their house, okay? And what I really wanted us to focus on was this bottom 2 sentences, okay? So we've got disruption in China, but we've also got a global travel disruption. And that is very, very important, especially when it comes to Canada Goose. And I'll explain later on in this video why, all right, guys? So keep that in mind, okay? The global travel disruption. You know, this event couldn't have come at a worse time, because Canada Goose's two biggest quarters are obviously the Christmas quarter in the Western world, and then the Chinese Lunar New Year's quarter in the Eastern world, right? Because we've got leading up to December, which is Christmas, and then leading up to the end of February, which is the Lunar Chinese New Year. Okay, guys, so this is quite a bad time for this to occur for the company. Now, they were doing well, so this company is doing well. I really like them. The long-term story isn't broken, but the black swan event here is how long will this whole, everybody staying at home and not leaving going to last for, okay? I think that's the golden question. And what I'll do is I'll quickly take you through in a little bit some key metrics so that we can try and extrapolate the data and try and project where we think this is going to start tapering off, okay, guys? So, as I mentioned before, the long-term guidance is intact. Fantastic. However, if we look at, now, let's go back and look at SARS, okay? So SARS happened back in 2003. And what we can see from the graph here is that it's affected things for about 3 months, okay? That was the sort of when new cases stopped getting discovered. But if you guys actually have a look at the effect on retail sales and also, I guess, global travel, we can see that the effect was a little bit longer, skewing to about 4 or 5 months until it started making a full recovery, okay? And the same can be said for the retail graph. However, there are some subtle differences between the coronavirus and SARS, and the reason being is because, as you can see here, back in 2003, there weren't nearly as many Chinese people overseas as there are today, and there weren't nearly as many flights to and from China, okay, guys? And so as a result, what's happened here is back in 2003, the SARS cases went a bit like this, whereas the coronavirus is going like this in a steep slope. And the problem with that is that, the sort of graph trajectory doesn't match at all, okay? This thing's still going like that, so who knows how long it'll take for it to go like this and then this, versus SARS, all right, guys? And so I think that's one of the things that we have to take into consideration. Now, the good news is that the growth factor in terms of the cases being discovered are slightly trending down. But again, if we consider, there's, about 40-odd thousand cases at the moment, or is it 80,000? I don't know what it is, but a growth factor of 0.7 on, say, 80,000, that is still absolutely massive. So I think the runway for this thing still has a long way to go. And that's sort of my worry and why I'm not in any rush to jump back into Canada Goose, right, guys? And like I said in the last video, I love the company. I think it's going to do well, and it definitely is still doing well, which I'll share with you a little bit later on. But, perhaps this might go a little bit longer than, 2-3 quarters like with the SARS episode, all right, guys? And the reason why I say this is because if we look at some more data, okay, at least 73 airlines have canceled flights to and from China, okay? And this was back on the 30th of January, guys. So, it's probably a lot more than that. And the problem with that for Canada Goose is because, like I said before, the whole SARS thing, it's fresh in people's minds. And now with the advent of social media, and like I said before, rightly or wrongly, people may very well be overreacting. But the fact is, whether they're overreacting or not, if they don't leave the houses, then they're not going to go out and buy non-essential stuff, apart from stuff you need to survive, okay, guys? So I think that's another thing that we have to keep in mind when we're sort of trying to analyze, a stock like this, especially with a black swan event like the coronavirus. All right, now, the other reason why the whole travel disruption is a problem for Canada Goose is if you just have a look, okay? So have a look at this picture and have a look at the clientele, okay? And really focus on who is actually buying Canada Goose. And if we look at the faces here, and like I said, this is, a bit of a blanket coverage, okay? They might not all be Chinese, but most likely they are. We can see that the line largely consists of about 80 to 85% Chinese shoppers, okay? And the problem with that is that, these aren't just Chinese shoppers shopping in China. These are Chinese shoppers shopping overseas who are from China. So they could be there to study, they could be there to work, they could be there to holiday, right? They could be there visiting a whole bunch of, they could be there living, but then, during the Lunar New Year, they would then go home and visit. So there's all sorts of implications. And whilst we don't have exact statistics of what, the potential ongoing effects to Canada Gooses over the next 2, 3, 4 quarters, what I wanted to do is I wanted to share with you some stats which could again help us to try and either project or approximate what we think the impact is, okay guys? So let's take Chinese students, for example. Now, the reason why I wanted to use this demographic is because according to my research, and I've done a lot of research, I can tell you right now there are a lot of Chinese students who buy Canada Goose, not just once, not just twice, but multiple times throughout the course of the year as they release new lines of fashion, okay? And the reason why that's bad is because that directly ties into the travel disruption, okay? So let's take Australia to start. Now, thank goodness Canada Goose isn't that prevalent in Australia because most of the places are very, very hot. But what we can say is that, roughly approximating, I think we can extrapolate this data to USA and Canada. Let me show you what I mean, okay? So there are a total of 189,000 Chinese students who study in Australia on an annual basis. 56% or 100,000 of these students are offshore, okay guys? So 56% or 100,000 of these students are stuck in China. Now, they would have already been back by this time because Chinese New Year ends sort of the end of January, right? Which means that it is still cold in the likes of Canada and USA, and they would have gone out and bought some stuff, all right? Now, if we take that roughly 56% and then extrapolate it to the 360,000 Chinese students based in the USA, then, we can say roughly about 200,000 of these students are stuck in China quarantining at home or self-quarantining at home, not sort of spending, okay? And then we can then extrapolate that to the about 140,000 odd Chinese students, probably closer to 200,000 because it's 2020, and Canada, and they contribute about sort of, $15–16 billion towards the economy, okay, guys? And so if we take into consideration all of these things and then go back and then look at the graph in terms of the effects of SARS compared to the coronavirus, and then extrapolate that out, you can see that exponentially this might have the potential to go on far longer than sort of 2 or 3 quarters, okay? And I think that that's what the market hasn't yet priced in, because remember, the management team has only downgraded this year's guidance, okay? They haven't said anything about next year, and they're taking a wait-and-see approach. Now, I think that come next quarter and they report, they're going to probably guide down lower the full year number for 2021, and I think that's going to cause the share price to capitulate, right? And that's why I'm not in a rush to sort of jump back in. Now, you guys might be thinking, well, this sounds like just a bunch of really shit news. Is there any good news at all? Is there any good news in all of this, okay, guys? And like I said before, look, I love the company. I think it's a great company, and there definitely is good news. They're doing all the right things. People love the brand. It's just that there's a bit of a black swan, okay? So like I said, they're doing great things. They're signing new deals with famous celebrities, all right? They're doing really, really, really well in terms of their sales. Now, they don't discount at all, okay? And in terms of today's retail market being disrupted by Amazon, all these retailers closing stores, trying to do discounts, margins are falling over, and their margins are going up, and it's selling at full price. This is fantastic, okay, guys? So over the long term, I think this company is going to do fantastic, right? It's just a bit of a black swan event at the moment. And also, look, very, very important, I think that this last point is something that we should really pay close attention to, okay? They are, of 12,000 designer stores, okay, and a bunch of brands studied across 9 million people's shopping behavior in 2019, they were the 20 hottest brands, okay, guys? So look, this is absolutely fantastic. And this isn't just, data that's been gotten out of thin air. That's from search data, sales trends, social media engagements, okay? We're talking the likes of Weibo followers, reposts maybe on Pinterest, maybe on Instagram, whatever, okay, guys? So look, I think everything is intact for the company, and I'm really, really looking forward to buy back in, but I'm just not too sure whether the market has truly priced in, what the implications of the coronavirus is. And based on my research, extrapolating the data out, look, I will be closely watching Canada Goose over the next 1-2 earnings calls, but I suspect that it's probably going to get quite a lot worse from here for another 2 quarters yet. So that's the reason why I'm not too in a rush to jump back in. But like I said, guys, I can't wait to jump back in. I think it's going to do great. And look, I can't wait for this whole coronavirus situation to blow over so that I can go back and hop on the Canada Goose train. All right, guys, so that's the end of the video. Bit of a quick update, and you know, hope you guys are doing okay with your portfolio during this volatile time. What companies are you watching? It'll be good to know. So if you want to leave a comment and let me know, you know, sort of what companies you're waiting for in terms of bargain hunting. And yeah, look, guys, until next time, happy investing, and I'll catch you in the next video.